Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel and a special video for you today. And we've covered investing in gold here on the channel in the past. In fact, even after prices have come down a little lately, gold is still up 30% since recommending it on March 20th. But we haven't really talked as much about the other darling of precious metals investors, silver. And I've gotten a lot of questions whether to invest in gold versus silver, so I wanted to get the video out for you today. Researching the fundamentals here, I came across a graphic on silver demand that just blew my mind, really. It's a silver use in electric vehicles chart, a demand chart I found on the miner First Majestic's website, and the increase in consumption is pretty amazing here. Now, my background isn't in materials or mining, so I wanted to get an inside opinion on this, the fundamentals behind silver as an investment, and how that rise of EV is affecting demand. So I reached out to First Majestic CEO Keith Neumeyer for an interview to get his insight into precious metals pricing, that gold-silver question, and what he sees in store for investors. Now we'll look at that interview next, but stick around because afterwards I'm going to talk about how I'm positioning for a potential rise in silver and some of the stocks in the space. Keith Neumeyer founded First Majestic Silver, that's ticker AG here in the United States, and FR on the TSX in 2002 after a career as a broker and working with several publicly traded companies in the materials sector. Now, the miner produces more than 20 million silver equivalent ounces a year from 3 mines and has a market cap of $2.3 billion. So thank you, Keith. Thank you for being here to answer some of our questions about silver and that gold-silver relationship, as well as how is silver affected by the rise of electric vehicles and some of that vehicle production.
Oh, hi, Joseph. Nice meeting you for the first time.
Excellent. So, getting right off, kind of a little bit general view of gold and silver. I know gold jumped to $2,000 an ounce for the first time ever this spring, but has since given back a lot of that. It's down about 5% now and was down 9% from the peak at one point. Is the bull run in precious metals over? And what do you attribute? What caused the price in gold to fall so quickly?
I don't think it's fallen at all. Gold remains over its prior high of $1,900 that was achieved in September 2011, and it's traded between 1880 to 1930 kind of thing, and it's just caught in this trading range. It's I call this pretty healthy market consolidation. So quite honestly, I think it's fantastic. I think it's just waiting for the next leg up.
Okay, interesting. So not necessarily any external factors that have caused it to come down, but just really a trading range where investors are trying to find a price for the metal.
Yeah, it's like anything, right? You look at anything, like a stock like Tesla, for example, or any trading instrument, any stock, any commodity. Look, copper bounced at $3 so many times before it broke through three. How many times did silver try to get through 1850? I think it made 5 attempts to get through 1850 over the last 5 years. So, these things just happen. There's a lot of chart driven, and a lot of technical factors. And, we are in a bull market for precious metals. And actually, I think we're in a bull market for all commodities, quite frankly. And then we're in very, very early stages.
Okay. So now looking at the relationship between gold and silver prices, something that's very interesting especially over the last year, where it's been much more volatile. But looking at a 5-year chart of gold and silver prices, they tracked pretty closely until silver started underperforming just marginally in 2018. But then over the last year, since really July of 2019, the price of silver has come up much faster and has been more volatile relative to gold. Is there something that explains that initial divergence where silver underperformed in 2018 to mid 2019, and then the volatility over the last year for silver prices?
Well, I think investors have to understand the silver market's tiny. You look at Apple's treasury, for example. They could buy the entire silver industry 10 times over.
Oh wow.
Yeah, so we consume as a human race about 1 billion ounces. Just slightly over annually. So you call it $24 an ounce approximately today. So that's a $24 billion market. That's nothing. So it could move on a dime. All of a sudden investor sentiment changes from one day or the other, whether it's, the US dollar, whether it's, people getting excited about solar panels or, whatever headline is hot that day. These tiny little markets like silver can be driven by, quite a lot, in a percentage term in a very short period of time. And silver is just a more volatile metal as gold. Gold is a currency and it's more stable. It's the granddaddy of all currency, and silver is a strategic metal. It's a completely different metal. And if you look at the move from, for example, 2010, go back and look at the move from the fall of 2010 to the spring of 2011, silver went up over 3 times, 300%. So, we had a move, from the high teens to, the high 20s. And then, sure, it's a big move, but now we're consolidated again. My same call on gold. We're seeing good chart movement on silver, and I think silver's getting ready for the next big run.
Interesting. Wow, I hadn't realized how small the market was for that, and I like that volatility, because obviously you can get much larger leveraged returns when if you can get in on that volatility. Now, Bank of America and Goldman Sachs both have targets for gold around $3,000 an ounce. Do you think that's a realistic target for gold, and what can take it to that point?
Look, I get asked my price predictions, on a regular basis, and I don't have a crystal ball, but in my gold and silver, they're two different animals, but you're asking me about gold. So, I think, 3,000 is a good target. I think it's probably going to go much higher than that myself, but, I'm heavily invested in both gold and silver, and I'm the chairman of a gold company. I'm the CEO of a silver company, founder of both companies. And so obviously I put my money where my mouth is, but it takes time for these things to move. And, in an environment like this, where the governments want to or seem destined to continually print currencies, and devalue their currencies, gold is the granddaddy of all currencies. So it just makes perfect sense to me that gold goes up in terms of other currencies, and you're talking about U.S. dollar terms. So, as the governments print, or as the U.S. government prints more dollars, it just makes sense that they're diluting their own currency. So gold should go up. And I think a lot of institutional investors around the world are buying into that thesis. And you've got a lot of big money, a lot of, very famous investors starting to come into the gold market, which is, obviously great for the miners. And I think it's a good place for investors to be focused on. And silver is a different animal, but I know that you've got a question coming up on silver, so I'll shut up there.
So in that scenario, I guess then, as gold does go higher, and especially, even much higher to 3,000 and beyond, how do you see silver holding up against that? So the price of silver, can it maintain that gold-silver ratio of around 72 times where it's at right now?
Yeah, well, I'm glad you asked that. The thing that I really focus on, and very few people focus on this, and some people think I'm crazy, but is the mining ratio. So, because that's the actual supply of the metal. It doesn't matter if silver, it doesn't matter what metal you're talking about. In this case, you're asking me about silver. So compared to gold, and you're saying that the ratio is currently about 72, which is accurate. It got down to the low 30s in 2011 when silver hit $50 an ounce. If you go back a few hundred years, the natural ratio was around 15 to 16 to 1, trading on a gold basis. The scientists believe that in the Earth's crust, there's somewhere around 16 to 1. For every 1 ounce of gold, there's about 16 ounces of silver in the Earth's crust. We're mining as the world, as the human race, all the mining companies combined in the world, we mine for every 1 ounce of gold, 8 ounces of silver, which is pretty shocking when you think that if the scientists are right, that there's 16 to 1 in the Earth's crust, we should be mining 16 to 1, but we're not. When I put First Majestic together 18 years ago, and I've been the CEO and founder for that long, seems like yesterday, but the trading ratio, or pardon me, the mining ratio was around 11 or 12 to 1. And it's been dropping, fairly substantially, now to 8 to 1. There's no new discoveries. The demands for silver are increasing. There wasn't solar panels, there wasn't electric cars when I put this business together. All the other green movement, that's obviously the green wave is behind us. We're not going backwards. words, there's a move around the planet to get off oil and gas and to re-electrify the planet in new green ways. Metals are going to be a huge component of that change. Silver is one of the most important metals in that whole new era that's taking place over the next couple of decades. That's why I call silver a strategic metal. So if you're mining 8 to 1 and you're trading at 72 to 1, that tells me that silver, should outperform gold. So in a $3,000 gold environment, call it what you want to call it, pick your gold number and divide it by, even round it up to 10, or even call it what the scientists call it at 15. You're still got a pretty big silver number, and that's why I put together a silver company.
It's interesting. What do you attribute the I guess the lack of production and exploration in silver to? If obviously, I think you're right. We've got this wave of demand for silver, already happening. Why has it fallen behind in that production, in that exploration?
In my view, silver is a lot rarer than people think it is. At First Majestic, we could go buy gold mines tomorrow. There's an abundance of gold mines available, not particularly large ones, but if we wanted to fill our portfolio with a half a dozen, small gold mines, we could do it pretty quickly. Finding silver mines are very difficult. They're very rare animals, and it's a more difficult metal to process. It's a more difficult metal to recover. It's a more expensive metal to mine. I was listening to an interview the other day where someone was claiming that silver is actually, easily mineable, but it's not. Gold is actually quite simple to extract from ore, when you pull it out of the ground. But silver is way more expensive and quite complex to do. It's a very difficult metal to deal with, and so production has been dropping. I think we're now in our 4th year of declining production. We have to check the stats, but I think 2017 or 2018 was our peak year. I think it was 2017, and we've had now 4 years. We don't know what the 2020 numbers are yet. Based on what we know, look at Peru, Mexico, Argentina. These countries were shut down, and we know, of course, ourselves, our production is lower than it was last year. And other mining companies are being affected the same way. So we're pretty certain that we're now probably seeing another year of dropping silver production and likely higher demand. So I think we're coming up to a perfect storm in silver prices, and I'm more bullish than I probably ever have been.
Okay, interesting. And one area that I really wanted to talk to you about, obviously, electric vehicles is the the news item lately. So silver's demand in not only electric vehicles but also auto production in general. I've seen a chart that auto sector silver use is upwards of about 40 million ounces last year, and a pretty steep rise over the last decade or so. But it's still only about 4% of the total demand, which is around 1 billion ounces. Some amazing growth. What do you attribute the growth to, in auto production, and is it going to keep on rising to, where it's a significant demand driver for silver prices?
Yeah, there's. I wish I wrote down some notes before this, but there's something like 100 million cars a year that's being produced. About 202 million cars are electric of the 100 million. So, and governments around the planet want to eliminate fuel combustion cars from their cities by, in some cases, 2030. Big auto companies like Volkswagen and others have come out and said that they want to be all electric by 2030, and there's other companies that have said other numbers like 2035, and I've seen other numbers by even greater than that. But nevertheless, the fact of the matter is this ball is turning and it's not going backwards. So, you throw your own numbers at it that you want. And I'm not an auto manufacturing expert by any stretch of the imagination. I'm, executive of a mining company. But, what I know is that demand for this very strategic metal is increasing quite dramatically due to technology. Whether it's cell phones or computers, this call would not be capable of occurring without silver, right? So, when you're sleeping, when you're awake, silver is necessary in everything that we do as a human race. And there's new drivers coming, and one is the green movement that is trying to electrify our planet in new ways. So whether it's fuel cells, nuclear plants, electrical cars, you name it, all this technology requires more silver. And at current metal prices, at $24 an ounce, the mining sector cannot produce enough metal to meet the demand. We're consuming 1 billion ounces a year, and we're mining 800 million ounces a year.
Interesting.
So there's a deficit of 200 million ounces, and that deficit's been gobbling up above ground silver supplies for over a decade. And it's getting to a point where it's becoming quite critical. And there's a debate going on in the sector of how many ounces of silver actually sits on the ground. And, there's, of course, the governments don't, publish how much silver they own in their vaults. But we're pretty certain that there's really not a lot of silver around. The data suggests there's between 1 billion and 2 billion ounces of silver sitting on the Earth's surface in commercial forms of some nature. 1 billion ounces of that is in ETFs. So another 1 billion ounces is sitting in, investment hoards or central banks or wherever it may be sitting. But that's a tiny amount of silver when the mining sector can't supply the current demand. So if the electric car movement continues and the green movement continues on the way we're seeing it in front of our eyes, then that demand's not going to change. So how does the mining sector increase production? Well, you said it earlier. Why isn't exploration more active? Why isn't the mining sector finding more silver mines? Well, we haven't found them yet. Maybe there's not enough investment going on in exploration and developing mines. But my view is that we need much, much higher silver prices, because there are current uneconomic mines sitting around the planet that at current prices you just couldn't mine economically. You would need $100 plus silver to mine some of these very low grade mines profitably. So the mining companies, because it takes so long from the time you first invest and the time you first get your production, sometimes upwards of 10 years, mining companies won't take that risk to bring these, marginal, low grade mines into production. So, you would need sustainable prices much, much higher than current metal prices today, or silver prices in this case, to actually force or entice the mining sector to make those necessary investments to increase production.
Wow, interesting. Okay. And I see in my notes that the company books about 61% of its revenue from silver, which is well above the average for a lot of the other peers, around 34% among peers. Is that a strategic choice? And how does being a better pure play silver miner really position the company?
Yeah, well, it is strategic. It's very tough, mind you, because as I said earlier, silver mines are hard to find. The last 2 acquisitions that we did have a lot of gold in them. So we produced 2 metals only. We produced silver at just north of 60% and 40% gold, or just slightly less. And, so it's a pretty good place to be. I love both metals and I love to produce more silver, but it takes time, it takes investment, it takes exploration, it takes development, and it takes good M&A. We're always digging around, looking at, ways of growing the business. We're producing somewhere around 22 to 24 million ounces of silver equivalent, of which about, as I said, the percentage already, which puts us in a pretty decent spot, particularly at current metal prices. We're profitable and so on. But looking for a way to grow is always a challenge, because silver is a very tough metal to find, for sure.
Okay. And First Majestic produces from 3 mines in Mexico. And I see you've entered into a purchase agreement as well with the Spring Pole project in Canada. How does the company plan on really maintaining that pipeline growth, or maintaining the exploration growth like you talked about? And how does that acquisition or the purchase agreement strategy play into all that?
Yeah, I touched a little bit on that. We had 7 mines active back in 2017. So now we're down closed a few due to the low metal prices. We had from 2015 basically. We had a little blip in 2016, but really basically since 2015 to 2020 or 2019, we had pretty low margins. So some of our smaller mines were losing money. A couple of them were actually producing lead and zinc and silver. So the silver is where all the money was, but then when lead and zinc prices dropped and silver prices dropped, they just became too expensive to keep operating. We had to make the tough decisions to close them down. Whether we open them back up again over the next couple of years is a decision we do talk about internally. So we could potentially do that, or maybe we'll sell a couple. I'm not exactly sure, but time will tell. But there is serious investment going into our 2 big mines. The Santa Elena operation, we're expanding that right now. It's going to be a lot larger over the next couple of years. San Dimas, which is our current largest mine, we're also investing quite heavily there. We're hoping it's going to be a larger mine over the next couple of years as well. When it comes to other types of investments, we're all in Mexico. All our mines are in Mexico. So, we are looking around in other areas. The Springpole opportunity came up to us. I am the chairman of that company. The company is called First Mining Gold. So obviously I was pretty familiar with it and pretty comfortable with it. That money, that company was, in need of financing, and they were having some challenges raising capital, and I thought there was a good opportunity there. Of course, I had to kind of step aside because I was in conflict of interest. So, but anyways, it made sense from a technical perspective. So, our technical guys and our finance teams obviously thought it was a good deal to do. It's worked out quite well so far. So, we're pretty happy with that investment, and we're happy to have that silver stream that could be bringing some silver into our production over the next 3, 4, 5 years. But there's other things we're looking at, and we're always looking for ways of expanding, as I said.
Excellent. Wow, some great points. Really, especially about the the deficit situation in silver. I don't think a lot of investors really know about that. I want to thank our guest today, Keith Neumeyer, CEO of First Majestic Silver. That's ticker AG here in the United States, and ticker FR there on the TSX exchanges.
Yeah, one thing, Joseph, people should go to the website, have a look at our PowerPoint presentation. We didn't really touch very much on the company. We talked a lot about the macro stuff, which is all very helpful, obviously. But people do want to look at the company itself. They should obviously go there and maybe even call the company if they have further questions.
Definitely. Yeah. And I'll leave a link to the company's website in the video description below. Actually, a great investor presentation. I'll be using some of the slides from that presentation, but click through, look for the link in the video description, and watch through that investor presentation, because it's really some interesting facts. Great interview there. And I wanted to wrap it up, bringing in some of the points Keith talked about, as well as how I'm positioning in silver and gold. Now, I loved using that gold-silver ratio in the past just as a trading idea, but it's really not telling us much right now at that 72 times on the gold-silver. What I loved about the interview is Keith talked about the mining ratio of 1 to 8 instead of that geological ratio of 1 to 16. So basically, we are mining much less silver than there is available in the in the earth. I like the increased use of industrial use of silver, and I think it's one of the major demand drivers, as Keith talked about, especially in the green revolution, whether it's electric vehicles, solar panels, and then just tech products in general, especially in that outlook for auto usage. And anytime you can look at a demand of 1 billion ounces a year and mining of only 800 million ounces, so we are in a 200 million ounces deficit annually for silver, I think that's got to push those prices up. And ultimately, I think short term, I think the prices do keep that relationship in the gold-silver relationship. So anywhere from between 70 or 50 to 100. But if that deficit remains, and it looks like it will, but if we're only mining, if the mining deficit is so great, if that mining deficit remains relative to what we're using on the demand side, then that gold silver ratio is just going to break down. It's going to go much lower. Silver is going to get much more expensive over the next 3 to 5 years and even longer out of that. So now, how am I positioning for all this? I think in the short term, that gold silver ratio does maintain within that band of between 50 to 100. So if the gold silver ratio were to go up from here, so gold prices get more expensive relative to silver, then I would definitely be a buyer of silver versus gold. If the gold silver ratio came down to somewhere around 50, where silver really did start climbing, then maybe I would pull back a little bit on that position, because I think it is a little bit more range bound within that ratio. Over the longer term, though, as Keith talked about, getting back even to that much longer term gold silver ratio of maybe 16 times, just because of the mining the mining scenario that we're in and the mining deficit. I think gold silver prices do go much higher, and that gold silver ratio over the longer term, 3 to 5 years and longer, comes down from that trading range, from 70 where we've seen it, 50 where we've seen it in the past, and even lower than that. So I think there's a much greater upside to silver over that longer term, over the 3-5 years and longer out. Now, 3 ways you can invest in silver, and this is very similar to what we talked about with investing in gold. First, obviously, is you can buy a physical silver, okay? But that's generally very expensive, and you really get nothing out of it until you sell, okay? So if you go to a lot of these websites that sell silver bullion or silver coins, or even silver storage, they're going to charge you something like a 4% fee to buy and then again to sell. So basically what you're seeing is you need the silver prices to come up around 10% just to break even on that transaction from buying and selling. Besides the fact that you're also paying around 1% each year just to safeguard those assets. A little bit easier investment is the silver ETF. That's iShares, the iShares Silver ETF. That's ticker SLV. And this is an ETF, an exchange traded fund that actually holds those physical silver assets, the physical silver bullion in a warehouse, and then that ETF is backed by that storage. So it's a little bit easier, but again, you still have to pay the expense ratio on that. Which isn't much, but it is still something you have to pay every year, and you get nothing from it. This silver ETF, the fund, pays no dividends. So basically, your only return is when you eventually sell that. So what I've done with gold as well as silver now is I invest in the miners, okay? And that's because, not only do you get the exposure to higher silver prices, but you also get a company that is using leverage, that is using management experience and strategy to leverage those prices. Okay, so if we look at the just a chart of First Majestic, again, that's ticker AG here on the U.S. markets, and ticker FR there on the TSX. It's actually outperformed that silver fund, the SLV, by 18% over the last 2 years. That's an 81% return total. And then just since this March, when silver prices really took off, it has outperformed the silver prices by 35%. So what you get, again, with those miners is not only do you get, occasionally they'll pay out dividends or special dividends, so you do get a cash flow while you're investing. But if your theme or if your outlook on prices is that prices will increase, then you're going to get a much higher leveraged return on those miners. So that's how I'm trading, whether in gold or silver, through those miners like First Majestic. Check out First Majestic Silver, that's ticker AG here on the U.S. exchanges. Look for the link that I'll leave in the video description below to the website and to that investor presentation. Click on the video to the right for an explanation of that gold-silver ratio and how I use it to invest. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.